What is good, guys? It's Rey-Jay back with another video, and in this one I'm going to be talking about the one and only SPY, the Nasdaq, the QQQs, and the indices. Break down what the charts are telling us and what you should be watching for tomorrow. Not tomorrow, I mean the future, and also what's going on with the market. Why is the market stuck right now between two important moving averages? What do I believe is likely going to happen in the future? Now, before I break anything down about this, before I get into any more details, I do have to mention a couple of things before starting. Firstly, I'm not a financial planner. Make sure you take none of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire community as a whole. And the last things, if you guys can, please check out the Moomoo link down below and in the description. If you sign up for Moomoo, the link down below, and deposit $100 into the account, you're guaranteed 7 free stocks, and 5 out of those 7 free stocks could be a free Tesla share. It's a limited time offer. The offer ends in just 7 days. Check it out before they run out. With that out of the way, let's get on with the video. So anyways, when it comes to SPY, this thing was actually up. We got an end of the day push up, and this happened because of more manipulation. Now, I told you guys in my previous video we'd likely get a sell-off in the morning, a nice bounce as the day went on. And I said we'd sell off because of Bullard. Speaking, that is what happened in the very beginning. But then I thought the market would end up slowing down because of the very hawkish news cycle, the very bearish news cycle, the bad news that came up from the Fed, from Janet Yellen, and etc. I thought the market would end up slowing down as time went on for Friday, and we'd actually close below max pain. Instead, the market makers, the manipulators came out and they pushed the market up at the end of the day, and they tried to cause a small short squeeze to actually hurt shorts, and they actually closed this just above max pain at 395. So now every week we have to be prepared for this possibility just in case. I just want to note that we always need to be prepared for this. Even next week we have max pain at 395 with a 2.67 put to call ratio. However, given what's happening in the markets right now, I just want to break down what else could happen and why on earth there could still be a bearish case. Why on earth there's no guarantee that this will continue. And that's because of the fact that, first off, right now, the news, the catalysts are in favor of the bears from a fundamental standpoint. You have to look at what's happening to banks right now. You have to look at inflation still being hot, the Fed continuing to tighten, the things Jerome Powell said. All of these things are suggesting the bears have the edge and we're going to be entering a recession, right? However, the market could also remain irrational longer than we remain solvent. And the reason why that's important is because we could cry and cry and cry about the price action. The market, however, will do what it has to do, and we have to be the ones to adjust to it. So with that said, when it comes to the market, we have some very important data coming out for tomorrow, some housing data on Tuesday. On Wednesday, there's not really too much coming out on Wednesday. On Thursday, we have jobs numbers and also the GDP numbers, the sales, with also lots of Fed speakers. And then finally, on Friday, we have the PCE data coming out. That's going to be very, very important with more Fed speakers later on. So we have tons of data coming out next week, especially during the last 2 days. Will this cause the market to tank or will this cause the market to rally? In my opinion, it's going to depend heavily on lots of data. But as of right now, I just want to note to everyone that there's a good chance the market is going to be stuck between these moving averages, and we're going to choose a direction based off where we break. For the past 6 days, SPY has been stuck between the 50 moving average, this is the yellow line up here, this is resistance, and the 200 moving average, which is now support, or the red line. When we touch the 200 moving average, we tend to get a bounce. When we touch or we get close to the 50 moving average, we tend to get rejected. Now, overall, we're just bouncing back and forth and back and forth. Whichever one we break will determine which direction we go in. What's the bullish possibility and what's the bearish possibility on SPY? Well, if you're a bull, you have to remember that there is always that whole, head and shoulders possibility I was talking about in my previous videos. We could be forming this left shoulder here, the head, and then one last right shoulder before we tank. That's one possibility, but I do think that's a little bit unlikely because of the fact that we have some strong resistance around 400. We actually failed to break that. And then the bearish possibility would be we just fail at this 200 moving average. We did test it today. We touched it. almost 2 times already, and we end up just continuing to tank from here. In my opinion, the odds are favoring. First off, be prepared for anything, of course, but the odds are favoring the market eventually breaking down below the 200 moving average. We may have only pumped because of max pain, and we might see more pain to come. I say that, once again, being prepared for anything, but I am saying that the market will most likely end up failing here and just continuing to sell off. And SPY is going to likely get to the 380s because the VIX, first off, is holding this 20 very well, and it's continuing to try to push up. The VIX is also getting very close to the 200 moving average. It did get rejected off of it, and it might just try to continue to break out. The odds do favor that on the VIX. I also want to note that the VIX we don't really have a divergence right now. There's not a whole lot else from a technical side, but we have been undervalued for quite a while, and it does look to me like this thing is still set for upside. Another thing I want to note is the fact that tech is starting to show some weakness. If you look at Amazon, Amazon closed red today, even though the QQQ barely closed green and SPY was a little bit green. Amazon was red. In my opinion, Amazon looks like it wants to cool off, especially at this 98 level. Tesla also closed red. Tesla is starting to get very close to this gap support around this 188 zone. It did touch 187, but then it bounced off this hourly 50 moving average. But since then, it's looking pretty weak. It's losing relative strength, and it has this gap to the low 180s coming. So if Tesla starts coming down, Amazon starts coming down, and then Nvidia, this thing to me looks like, all right, it looks to me like this thing was in a topping process up here. This is what I told you earlier. And I predicted that Nvidia would end up touching about 264, maybe close somewhere around there. We closed at 267, but we were still down over 1.5%. Because it looks like it peaked here, it could be continuing to downtrend. We might see this thing enter 260 very, very soon, or around that zone. And in my opinion, the odds do favor this thing starting to come down, as it has been very overextended. On the daily, it still is overbought, despite how much it actually dropped today. It still is overbought. Once again, suggesting the same thing. Apple held up quite nicely. We actually closed above 160. We're going to likely continue to chop on Apple. We've been just ranging between 162 and like 157.5. This could be in another topping process. If this thing does break below 157.5, it's going to likely drag the market down. I think that's very possible, as it's just chopping back and forth for the time being. Google is down to about 106. My prediction was this thing would get to about 105, and if it broke that, 103 could come. We actually closed at around 106, very flat. I do think Google could be in a topping process, at least for the time being, and the market could actually dictate it. Meta actually did better than I expected. I thought Meta would pull back a little bit more. I think I told you guys that Meta could come a little bit lower from where it actually closed and actually retest 200. Instead, this thing actually bounced off some pretty decent news. But for the time being, I still think Meta is in a topping process. Downside is still very possible. The whole situation going on with TikTok right now could also benefit companies like Meta. That, once again, is like an externality. We have to watch that carefully just in case. For the triple Q, I just want to note something. This thing closed above 310, held up quite nicely, but for the majority of the day, or at least a large part of the day, this thing was actually red. Right? We saw this thing kind of red for a lot of today. It came all the way down to about the 308, 307 area as it continued to drop. We have some major resistance around this 310 to 313 area. And so far, it's actually failed to break this zone. So my question is, what's going to happen if Nvidia and Tesla and many other big tech stocks start to tank? This might slow down the triple Q. It might actually start to see some downside soon, because we're actually very close to the tough resistance up here. So the risk would be to the upside. It's very tricky to be buying into this like around these high levels. It looks to me like we might see this thing pull back, but also we have to be very careful because there is lots of manipulation in the markets. But once again, the odds do favor this thing eventually pulling back. The dollar is up to 103 now. I told you the dollar is probably going to get a breakout. The dollar is starting to break out again. This is something that tends to be bearish for the markets. We got a nice bounce off 102. We're trying to push up. Once again, if this does continue to break out, this will be bearish for the stock market. 10-year treasury yield is actually a little bit down. I was looking for this thing to bounce off this 33 area. It actually hit about 32.95. I want to see this thing reverse and start pumping a bit. And I think that this thing is very close to support. So it should try to bounce and try to get above the 200 moving average very soon. If that happens, that would be bearish for the markets. So what's going on in the markets is there's both a bullish and bearish possibility because of how manipulated the market is. However, right, you have to watch the 250 moving averages. I believe the odds favor us retesting the 200 moving average and eventually breaking below it. I think the odds favor that because of the negative news cycle, what's going on with the banks, also because of inflation, not to mention the fact that we are in a condition where the market is going to start tightening soon. We're going to start seeing earnings, which are very, very negative, especially going into the next couple of weeks when they start coming out. And there are so many catalysts out there favoring the downside in the markets. Also, many tech stocks, individual stocks are starting to show some signs of weakness, like Tesla, not to mention Microsoft. As the stocks start to show weakness, as Amazon starts to pull back, this could have a negative effect on SPY as well. It will most likely negatively affect the QQQ. So I do believe that going into next week, the odds do favor us getting a retest of this 200 moving average. I don't know for sure what's going to happen, but I do believe the odds favor us retesting it and eventually breaking it and getting a retest of 385. I also want to note that the news affecting Deutsche Bank is not necessarily helping the depositors out there. So as more banks continue to struggle, it's clear that this may be a bigger global issue than many people anticipated. And this is very similar to a lot of the things that happened in 2008 when millions of people were in denial of the problems ahead of us. I believe we're entering a recession. We could already be in one, but I believe we are going to be entering a recession. Things are going to get tighter. Unemployment is going to go up. And banks, the whole banking situation, the struggles are just barely emerging because of the fact that there's so much more hidden behind the curtains and it's just barely coming to light. This is just the beginning. So I don't really mean to spread FUD or scare anyone, but I just want to make it clear the recession is most likely coming. The market will likely have downside. And once again, I do believe we should be prepared for anything, but the odds do favor downside to come for SPY, the QQQ, and many tech stocks, and etc. So thank you all so much for listening. Have a great weekend. I will release another video on Monday. Not Monday, Sunday. Excuse me, on Sunday. I'll have another video come out and we'll break down what could play out for the markets going into Monday. So thank you all so much for listening. The market to the moon because the long-term future is still very bright, and peace out.